So we are starting the next chapter, that is introduction to the Global Investment Performance Standard GIPS.
Okay.
Okay. Hello.
Yes, sir, I heard you. Yeah, you can
Yeah.
continue. Yes.
So let's start this. Like this reading, this is exam focus point, covers the key features of Global Investment Performance Standards that was adopted by the CFA Institute in 1999, and subsequently they have updated it. Subsequently updated, like, okay, and it has got updated, and compliance with GIPS is voluntary. Actually, it's not mandatory. You should, like, voluntarily they do that. For the level 1 exam, you are responsible for GIPS metal included in the book of candidate readings for level 1, and also for the sections of GIPS standard for firms that are referenced in level 1 metal. The GIPS standards for firms are available on the CFA Institute website. What is the information? Introduction to GIPS. First, we will understand what is this standard all about. So, explain why GIPS standards are created and who can claim compliance and who benefits from the compliance. So that means who should comply with and how come that can benefit. So, when firms choose their own methodologies for reporting investment performance, that means if I have a firm and I have my own methods of like of seeing the investments, and also like the investment performance, how it's going to be, if I report that, the results are not comparable across the firms, and the firms have a tendency to choose a methodology that makes their performance look good. Some choices that tend to bias results are choosing a top performing portfolio and claiming it represents a firm's overall results for all assets managed. So they what sometimes happens, so some results, some choices, like some choices the firms make, and those choices don't kind of always like match with the results, or that has like some biased results. Okay, so like sometimes choosing a top performing portfolio and claiming it represents the firm's overall results for all assets managed. So they claim like that. They choose the top performing portfolio and they claim that the results match with the, they claim that it represents the firm's overall results for whatever the assets they are managing. Excluding terminated accounts, that is not good, na? Someone who has left your firm because you did not perform maybe, and you terminate those accounts, which may tend to be accounts closed by investors due to subpar performance. So sometimes you may not perform well. It doesn't mean that you should remove that. You should also show where you don't, where you have not done well. Okay, just a second, Abhijit. So where you have not done a good performance or below normal performance, you should not remove that. You should show that subpar, below normal. Selecting time periods to report that put firm performance in the best possible light. It should not be like that. GIPS present a standardized methodology for performance reporting that makes comparison of performance across firms meaningful. So since this is a standard, this makes the things more standardized and more of order. So these standards, if followed, the like comparison of performance across all the firms becomes very easy. Okay, and so if you follow this particular standard and do the performance reporting, then that can be achieved. Provide specific information that is useful to current clients, prospective clients and investors. So some very important information, like very specific, like what information they require, that information, and avoids misrepresentation of performance. So these standards, if the firms follow, then all these things automatically like these are a part of the standard. So widespread usage of GIPS can also give oversight bodies a clearer understanding of the returns achieved and the risks taken by the firms they supervise. GIPS only apply to firms that manage assets for others. Okay, presenting performance information compliant with GIPS is voluntary for such firms, and voluntary, not mandatory, and they may only claim compliance with GIPS if they comply fully and on the world firm-wide basis. Okay, they have to comply with the GIPS, complete compliance they should do. Other firms related to asset management business such as software developers may state that they endorse GIPS but may not claim compliance with GIPS. So other firms related to asset management business as well, such as some software developers, they may state that they endorse GIPS. That means, what do you mean by endorse, Abhijit? But they may not claim that they comply with the GIPS. Okay. So what do you mean by endorse?
That you attest, that you verified.
Sorry.
Whatever. That you attest.
Yeah. Okay. Yes. Approve. That's what. Support. So they support GIPS, but they don't. It's not necessary that you should comply with GIPS. Describe key concepts of GIPS standards for firms. GIPS standards for firms consist of 8 sections. Fundamentals of compliance. The fundamental issues involved in complying with GIPS are A. First, defining the firm. They should what is the firm definition as per GIPS? That is the first thing. Okay, as you should comply with that definition. Providing GIPS compliant reports to all clients and prospects. Complying with applicable regulations and laws, and presenting information that is neither false nor misleading. This is the first fundamental. Input data and calculation methodology. So input data should be consistent in order to establish full, fair and comparable investment performance presentation. Certain methodologies are required for portfolio return calculations and certain other methodologies are required for composite return calculations. Okay, so they say certain methodologies are required for portfolio return calculations and certain other methodologies are required for composite return calculations. Okay, so different methods. Okay, so uniformity in methods across firms is required so that their results are comparable. Otherwise, you cannot compare. Composite and pooled fund maintenance. So, what is this composite meaning, Abhijit?
It has multiple asset classes inside it, or it can combine several funds.
Yeah, like it may have different materials, correct? Different parts or different materials. That means, yeah, combined. So composite and pooled fund maintenance. So combined and pooled fund creation of meaningful asset weighted composites, that is combinations, is important to achieve a fair presentation. Composite performance is based on the performance of one or more portfolios that have same investment strategy or investment objective. Composite returns are the asset weighted average of returns on the portfolios that are included in each composite. Pooled funds must be included in a composite if they fit its definition. Composite means combination of securities. Composite time weighted return report. Then again this one. So what we have discussed, GIPS standards to firm consist of 8 sections. So the fourth section is this. Then composite money weighted return report. Time weighted means time has given the weightage here. Time has been given the weightage. Money has been given the weightage. How much money it's giving you. Then pooled fund time. Composite means, what do you mean by composite? What's the difference between composite and pooled?
You see, pooled can be you are adding up the total investment quantum. So suppose I invest 25 crores, you invest 25 crores. So they'll pool it and invest the 50 crores in some sort of a fund.
See, composite fund is nothing but aggregation of one or more portfolios, correct?
Agreed.
So, pooled fund is any pooled fund that is not broad distribution pooled fund. So, generally, like pooled fund and composite fund, like what can be the example?
A composite fund may comprise of several different asset classes. So, for example, an investor may choose a combination of equities and ETFs. And a pooled investment can be compared to a mutual fund where they are pooling money and or insurance or pension or whatever you want to do, and the fund manager takes a call on where to invest.
Yeah, see, if I say pooled funds are like mutual funds, correct?
Yes, that is what I just told. Yeah.
Sorry?
Yes, that is what I just told.
Funds are mutual funds, hedge funds. But then, what is this composite funds then? It's like some defined fund.
No, I think you see, they will combine several different funds. So a composite fund, maybe you
May
can
have
take a money
pool
market
funds.
fund.
No, no. Composite may have different funds.
Sir, let me just complete what I'm trying to say. A composite fund, an example can be, you see, you take the money market fund from Tata, you take the corporate bond from some other HDFC
Yeah,
Mutual.
that's what I'm saying, Abhijit. An aggregation of one or more portfolios into a single group that represents a
Yes,
particular investment objective or strategy. Correct?
yes, that is what I'm trying to avoid.
Yeah. So, okay. If we have to construct a composite, then how will we construct? Suppose there are some 100 accounts, and one of your strategies is to invest in large cap value stocks, and you use this strategy for 70 accounts. Okay, so I will take this is mutual fund. These are types of funds, but if I say like large cap funds, that can be a composite fund, correct?
Huh?
Small cap composite fund, multi cap composite funds, correct or wrong? That is
Yeah.
that is as per some strategy, na? Isn't it so?
Yes, it's a strategy.
That's what, yeah. So, pool section 4 through 7 contain required and recommended procedures for reporting the performance of composites and pooled funds, as well as necessary disclosures. So, mutual fund can be, you can take any stock or anything, but composite means some specific. So there are some disclosures that all firms must make, but some disclosures may not apply to all firms. If a disclosure is not applicable to specific fund, the firm is not required to include any statement regarding it. So this is regarding disclosures. A firm that has met all requirements of GIPS may include an appropriate claim of compliance. So GIPS advertising guidelines is also there. If an advertising includes a claim of compliance with GIPS, the advertisement must comply with these guidelines. Guidelines do not apply to advertisements that do not reference the firm's GIPS compliance. So, if suppose some advertisement is including a claim of compliance with GIPS, that means the company says that they are completely complying with GIPS standards. That is okay. That means they should comply with these guidelines. But guidelines do not apply to advertisements that do not reference the firm's GIPS compliance. Okay, you can show is it as an additional information that you're complying with GIPS, but that advertisement won't comply with the GIPS like things. Correct? The advertisement can show that you comply with GIPS, but GIPS would not comply with advertisement things. Now, explain the purpose of composites in performance reporting. So we have discussed about composite right now. Grouping of individual discretionary portfolios representing a similar investment strategy, like you can take, we have discussed right now, multi cap, small cap, large cap. So examples of possible composites are large capitalization stocks, we discussed right now, investment grade domestic bonds. So of some specific nature securities you take and you make a portfolio, that is a composite fund, isn't it so? Describe the fundamentals of compliance, including the recommendations of GIPS standards with respect to definition of firm and firm's definition of discretion. So the definition of firm as per the GIPS is what? For purpose of GIPS compliance must be the corporation, subsidiary or division that is held out to clients as a business entity. If a firm has different geographical locations, example doing business under the name of Bluestone Advisors, let's say, then definition of firm should include all the various geographic locations and their clients. That also should be a part of the that means you should show that they are also complying with GIPS. Okay, the entire organization, even though you have different branches in different locations. The definition of discretion refers to how a firm determines which of the portfolios it manages should be included in a composite. That means they would do that based upon their own vision will. A firm may determine that a portfolio is non-discretionary and therefore not include it in a composite. That means something which they want to do based upon their own uh, like uh, like if they can manage it, they can do it, they can put it in the composite. That means if they want to make a large cap fund, in that what they want to include, they will include. Something they want to exclude out of it, they'll exclude it. That is non-discretionary, isn't it so?
Yeah.
So if the client places restrictions on it that prevent the manager from carrying out the intended strategy. Discretionary means you are doing, the definition of discretion refers to how a firm determines which of the portfolios it must see. Suppose if you take Motilal Oswal, okay, they have all the baskets, okay, of different stocks. So that is upon their discretion, correct? Isn't it so?
Of course.
Sometimes you can select your own stocks and you can make a portfolio, correct? That is not discretionary. They have that option also. Yeah. Now, describe the concept of independent verification. Firms are encouraged to pursue independent verification of their compliance with GIPS. Verification, that means whether they are following or not, they should verify. Verification applies to the entire firm's performance measurement practices and methods, not a selected composite. If a firm chooses to pursue verification, it must be performed by third party, not by the firm itself, on a firm-wide basis. This third party verifier must attest that firm has complied with all the GIPS requirements for composite construction or on a firm-wide basis. That means for all the investments, whatever has they are doing and making a fund, they are following the GIPS standards. The firm's processes and procedures are established to present performance in accordance with the calculation methodology required by GIPS. Okay, following the standards and how they calculate the returns and all. The data requirements of GIPS and in the format required by the GIPS. So as per the GIPS standards only, they should do all this. Verified firms should include the following disclosure language. So how they should do that is, they should insert their name and that have been verified for periods like dates from what to what and the name of the verifier, and the copy of verification report is available upon request. So this is also done, Abhijit. Next is ethics application. We'll do this in some other session, but next we'll start with quants. Okay? Tuesday.
Sure.
Hello.
Yes, I heard you. Thank you.
Thank you, Abhijit. Thank you. Yeah. See you on Tuesday. Yeah.
So,
bye.
Tuesday, what time? Tuesday, what time?
Sorry?
You said Tuesday, right? May I please know the time?
Tuesday is what date, Abhijit?
Tuesday would be the 7th of March.
Shall we connect on 8th?
You see, I have no problem. Yeah.
We'll connect on 8th, Abhijit, because 8th I am having holiday. That's why. Okay?
Okay. Because Tuesday I wanted to make sure because it's holy. I did not want you to be surprised.
No. Actually, holy holiday. I'm just calling you, Abhijit. 2 minutes. I'm calling you.